Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, September 20th, 2012. Thank you all for tuning in. Let's jump right into the charts here. We'll start off with the usual S&P 500 E-mini futures. They are trading down at the moment by 4.5 points to 14.55 per contract. So once again, futures coming under a little bit of pressure. They were lower in the overnight session around 3 o'clock in the morning, but have since bounced up. That tells us usually that the dollar probably pulled back. Let's take a look at the U.S. dollar index, and sure enough, you can see that the dollar put in a little bit of a high, a secondary high, around 4:30 in the morning, and they have pulled back a little bit. So futures have come off the lows as the dollar has pulled back. But either way you slice it or dice it, this is a decent pop, at least for the dollar this morning, trading up 46 cents on the Z contract. So a pretty nice little move for the dollar. We'll see if the dollar is building a little bit of a base here to maybe make a move higher later. If the dollar goes up, expect the markets to come under pressure. Now, across the pond in Europe, you do have the markets over there under a little bit of pressure today. Nothing terrible, but you do have the German DAX down about 0.4%. The CAC 40 is down 0.7%. Italy, the FTSE MIB, the Milan Index is down 1.5%. And Spain, the IBEX 35, is down 1.2%. So a pretty good decline in Italy and Spain. That is always something that traders are going to have to watch for. Looks like Italian bond yields and Spanish bond yields are basically they're actually down just a touch, and now they're actually moving up. So we'll keep an eye on that. That could tell us a lot. But right now, I don't think you need to look any further than the U.S. dollar index chart. Dollar down, the market moves higher, and vice versa. Gold this morning is very important to follow. It is down $9 to $1,763 an ounce. If you take a look at the GLD, which trades till 4 o'clock, you'll see the GLD was much higher and has really come back down. Yesterday, GLD closed at 171.74. Today it's trading at $170.90 at the moment. So again, if that dollar moves up, expect gold to pull back. The same case can be made for light sweet crude. Light sweet crude is basically flat this morning, just down 12 cents as we speak to $91.88 a barrel. If you take a look at the USO, that was creamed yesterday on the downside. Today it's kind of holding steady. So really just up a little bit. It's trading at 34.18 right now. Yesterday it closed at 34.12. There's a lot of support right below this 34 level. If that level gets taken out, then I suppose we could see much further declines. But right now there is still some support in that area. So again, it's all about the dollar. If the dollar starts to move down, oil, gold, things of that nature will get a bid. If the dollar continues to move higher, all the inflationary plays will come down and trade lower. They've had a great move since the QE3, since the Mario Draghi bond purchasing, QE, and since all of this has taken place in the month of late June and throughout July. All right, let's take a look at some stocks that are in the news today because we will have economic data in about 6 more minutes. The weekly jobless claims report will be out. But let's take a look at some stocks that are out there in the news. We're going to start off with Norfolk Southern. Ticker symbol is NSC. The stock is getting roasted and toasted today. It closed at $32.69 yesterday at 4 o'clock. Today it's trading at $68.28. Here's the levels that I came up with this morning. And I suppose they're pretty decent. But right now you'd have to watch $67.70. And then you're going to have to look all the way down to $66 even number, okay? So those are going to be your near-term support. If that level breaks, it would be $62.88, but those are your scalp bounce levels for Norfolk Southern. Okay, so it's $67.70, and then it's a little bit lower after that, down to the $66 even number. Those are your support levels, and then it goes all the way down to $62.88. So those are the levels you watch for. Quick little bounces there. It's a fairly strong gap. It's not the strongest I've seen, but it's a decent gap lower this morning. Let's take a look at Conagra Foods. Ticker symbol CAG. This stock is getting a big bid, trading up above $27 a share. It closed at $25.65 yesterday, so that's a pretty decent move. It is now going into overbought territory, so watch this thing around the 27.50 level. Believe it or not, if it gets above that area, it can trade higher. It's a decently strong gap, so you want to respect it. Next resistance after this would be $30.40, possibly $30.50. I'm not sure if it gets there. Right now, the stock has to get through that 27.50 level, so we'll see if that does happen. But anyway you slice it or dice it, a pretty decent gap up this morning, pretty good strength, but it's now into overbought territory. So be careful with this one. You don't want to really pick it up here. In fact, around that $30 level, $30.50, it looks like a potential fade candidate. However, it's a fairly strong gap, so you don't really look for much of a fade on these kind of plays because it's coming off of pretty much a 2-week base, and it really does. It looks like it has some strength behind it. The next one we have is Adobe Systems. ADBE is the ticker symbol. Right now, Adobe's trading at $33.25. It closed at $33.12. It's really been all over the map. Traded as high as $34.50. It has come back down. Right now, I don't see much here. I could just give you the range of this one. If this stock gets down to around $31.25, it looks like there's going to be some pretty decent support. And if the stock trades as high as, I'm going to say, $35, it looks like there's going to be some decent resistance. So it's kind of in the range there, nothing in particular. It's not making a big move one way or the other, at least at the moment. Next one we have on our radar here is Bed Bath & Beyond. The ticker symbol is BBBY. They had earnings. The stock has been beaten up pretty good, so I have to think that there's going to be some support levels coming in here soon. Let me just get my best levels out here. At least what I think is going to be the best levels. Okay, so what traders are going to have to watch for, first off, and you're trading at 65.33, so I think there's a little bit of support where it is, but the better support level is going to be at $63.68, $63.68. After that, it will be down to around the $60.50 level, and you may find some short-term support at around 62. I can't rule that out. So watch $63.68, $62 area, give or take 20 cents, and then it's really down to the $60.50 level. After that, you have to look all the way at double bottom from June, and that would be at $58 and I believe 77 cents. So watch all of those levels going forward. They will be in play. Another one I saw earlier, I don't know how great this one's going to be. It's very thin stock. Herman Miller, ticker symbol is MLHR. This one is getting clipped today as well. It closed yesterday at $20.31. It's trading at 19 bucks. Right now, I'm going to say that looking how this thing is played out here, you probably have to look at the well, you're going to have some support around 19. That's first off. After that, it will be $18.28, $17.50, and then it's really down to 16 bucks again. So keep those levels on your radar. Herman Miller is not a strong gap down, so those bounce areas are very possible. The only problem is it's a very thin volume stock. It does not trade 1 million shares a day. Those stocks have a tendency to overshoot, so please remember this is more of an aggressive trader's play. It's not an easy one. All right, with that said, everybody, I think I've covered everything I wanted to. It looks like the weekly jobless claim number is coming out. It's just been released. I'm not even sure what the number is, but either way, you see the futures starting to just tick down just ever so slightly. It's not really that big a deal. I'm not even sure what the actual number was, but it doesn't matter. We only care about the reaction in the stock market. That's what's important. The actual number, who knows if it's even true. We just care about how the market reacts, and the market's having really a very little reaction to the job number, to the weekly jobless claim number. So we'll leave it there. I want to wish you all a great trading day, and we'll see you on the charts tomorrow. Take care, everyone.